Geopolitical pressures that we're seeing now are reshaping, I suppose, the economic fundamentals. And with the war that's currently happening in the Middle East, the big question that we are still probably don't know the answer to is how long is this going to go on for. We all hope that it will end soon. But the longer it goes on for, the bigger the geopolitical impact will be on those economic fundamentals. And that is what is, taking longer to resolve on the back end of it.
Hello, ladies and gentlemen. Thanks for joining me, Yuri, for the PWM Tea Break with my returning special guest, Jacqueline Broers, Portfolio Manager of the Utilico Emerging Markets Trust. It's great to see you, Jacqueline. And what sort of tea have you gone for today?
It's been very boring. I've gone for exactly the same cup as last time, a traditional English breakfast tea. Thank you.
All our eyes are on the Straits of Hormuz at the moment, that narrow shipping lane. And firstly, our hearts go out to all the people losing their lives in this conflict in the Middle East. And we've had a variety of opinions we've carried in PWM about the situation in the Gulf, including a great piece from my colleague Elisa about the impact on Dubai. The current energy crisis, Jacqueline, what is the impact on the companies in your portfolio?
We focus very much on utilities and infrastructure assets within emerging markets, and these tend to be the fundamental backbone of an emerging market in order for them to progress and develop. So actually on an operational level, things like water assets within Brazil, for instance, so there's no impact on an operational level. And on global trade, where we've also got exposure, people are asking us how we're affected. ICT, which is International Container Terminals, which is a port operator listed in the Philippines. It has 32 terminals within over 20 countries. It's got a hugely diverse portfolio. But one of their assets is in Iraq. So everyone's like, what's going on there? Look, it's operationally still completely fine. The issue that they've got, obviously, is goods can't get out of the port. But actually what they're able to do, ICT, is they charge also for storage. So actually revenues are compensated for volumes not coming in and out. They're compensated on the storage side. Where the actual sort of pressure is coming is just from global market sentiment. With energy prices increasing, there's a risk of higher inflation long term. Higher inflation long term can mean higher interest rates, and that really is impacting the cost of capital for a lot of the emerging markets. Higher cost of capitals tends to then impact equity valuations, and that is where we're seeing the pressure.
But it's interesting, Jacqueline, that you're talking about that global market sentiment, because we had a piece from Elliot Bassett, and he's saying, look, there is that sentiment, there's the macro conditions, but there's the geopolitics and all those factors you were saying that are affecting those shipping terminals and those vivid stories that you just related to us. Once these supply chains are broken, once the factories are closed, this can take a long time to go back to where we were. It can be months or years before that supply chain is reconfigured again. Is that the sentiment which you share as well?
At the end of the day, economic fundamentals still are crucial, especially for emerging markets. So the growth in the economy, inflation rates, interest rates, and sort of central bank policy. But yes, what you're seeing is that geopolitical pressures that we're seeing now are reshaping, I suppose, the economic fundamentals. And with the war that's currently happening in the Middle East, the big question that we are still probably don't know the answer to is how long is this going to go on for. We all hope that it will end soon. But the longer it goes on for, the bigger the geopolitical impact will be on those economic fundamentals. And that is what is, taking longer to resolve on the back end of it.
And we're seeing some focus now on desalination and water. And you have some water stocks in your portfolio, and the climate transition is very important to you, sustainability. I remember you had some water investments before in the Philippines. How have they performed?
Over the last year, actually, our exposure to water and waste assets has increased. It's nearly doubled. It's now 20% of the portfolio. Water infrastructure assets still remain the fundamental backbone of the emerging market economy. Emerging markets can't grow unless you have that sort of water system, I suppose, in place that is sufficient for the economy to grow. And yes, we have increased in the Philippines. We've got Manila Water there, and we also participated in an IPO earlier last year or late last year in Menalad Water. Within the Philippines, there's still 48% of the population. Well, only 48% of the population have access to safe drinking water. There's still a lot of investment to go to get you to that more sort of 90 to 100%. We've got high exposure in Brazil as well, because still 15% of the population don't have access to safe drinking water. The Philippines, for instance, needs investment from private companies. So they are setting up or establishing regulatory environments which offer quite attractive regulatory returns, long-term concession contracts. So then for us as investors, we can see effectively what the CapEx requirement is over the duration of the duration of the concessions. They're often inflation linked as well, and they provide attractive returns for us, which obviously then we can provide to our investors on a long-term basis.
And of course, it was World Water Day recently, and I think we had a piece about the size of this industry. I mean, a $3 trillion industry, basically 360 listed companies, and a lot of them in emerging markets, as you're saying. And the emerging markets, I mean, they were creeping back into investors' portfolios before the current crisis. We had a piece by Ian Smith from William Blair about mining stocks, about shipbuilding, about defence stocks, a lot of them in the developing economies. After the crisis is over, will we come back to a renewed focus on the emerging markets?
I've been covering emerging markets now 16, 17 years. The fundamental growth drivers within emerging markets, rise of the middle class, urbanisation, strong GDP growth, again, maybe slightly impacted in the short term because of what's going on in the Middle East. But look, the fundamental growth drivers remain, and they are incredibly well placed. And emerging markets as a percentage of global GDP, I think by 2040 will exceed that of developed markets. So emerging markets are not to be ignored.
And if we look at the real kind of overall, the mega trends, and my colleague Elisa was trying to uncover some of those, talking to some of the chief investment officers of the largest global private banks, and they were all agreed on AI linked with energy infrastructure, data centres in particular, and the utilities, and they were their big bets. Does that very much match your prognosis?
AI, as we all know, is not just software development, it's also the physical infrastructure that backs up that demand for AI, and that is what we're really interested in, especially within emerging markets. So the data centres, for instance, we've got a few investments there within data centres, which is, if you know, needed for the AI growth, but also the huge energy requirement for the growth in AI, again looking at renewable energy companies and sort of generation companies as well, and how they can support that AI growth. And on the flip side also is transmission networks and the grid stability. So all of those things have been a driver, I suppose, within the portfolio as well.
And I think your latest scouting trip was in Latin America, Jacqueline. Which country was the highlight for you there?
Brazil was obviously is well placed at the moment. Rates have been typically relatively quite high, or nominal rates have been high, but they're looking to be reduced over the near term, which will obviously be a driver. But again, this Middle East conflict is potentially causing a slight sort of speed bump along the way there. But look, I mean, at the end of the day, we are very much at UEM bottom-up investors. We are looking for the 60 to 70 investments that may have been mispriced, or oversold or undervalued. So yes, LATAM we came back incredibly positive about LATAM, but we are constantly scouring the whole of the EM infrastructure utility sector to ensure that we find the best investments to give the highest return for our investors.
Jacqueline, you've seen several energy crises. We don't have the queues in our petrol station forecourts as yet. They may still be coming in the future. And we've got the trusty FT kettle always on the boil, our dedicated staff supplying us with cups of tea. And I look forward to sharing one with you again in a future episode of the Tea Break, Jacqueline.
Thank you.
Thanks so much for joining us today.
Cheers, thank you.
And sadly, ladies and gentlemen, that's all we have time for. And I look forward to seeing you all next week. So please send in your questions. Next time round, we'll be discussing digitisation of wealth platforms and the links between the human and the machine. So please keep watching, and I look forward to joining you again for the PWM Tea Break.